let's start the program with the big stock story and market story, really, of the day. And that is Apple, giving a stark warning on revenue due to the impact of what else? The coronavirus. The iPhone manufacturer tumbling nearly 2% today, but finishing well off its lows. Go to Josh Lipton in San Francisco with more on what exactly Apple said and the reaction. Josh.
So that's right, Brian. Apple did finish in the red here today, but maybe not hit as hard as some had expected. Many analysts weighing in here and concluding that this is a short-term challenge, meaning they think that demand for Apple products simply now shifts from the March quarter to future quarters. On the other hand, listen, there's still a lot of uncertainty and a lot of questions. How long does this outbreak really continue? How long before Chinese consumers feel like it's safe to go back out and shop? Remember, Apple's only has 7 out of 42 stores that have been reopened right now, and even those have limited hours. And when will manufacturing facilities fully ramp back up? This is the second time in 2 years Apple has cut guidance. Remember, last January it did the same, but since then, we know investors have piled into this name, betting on a stabilizing iPhone franchise, services, wearables, and 5G. Stock has surged more than 100%. Of course, it's not just Apple. Many companies depend on China as both a key consumer market and critical link in their supply chains. Bernstein's Tony Sacconaghi highlights other companies with significant exposure to this outbreak. Names he highlights in his coverage universe: HP, Tesla, Dell, and HPE. What about Apple's big rival, Samsung? Tech analyst Patrick Moorhead says it sources components from China, too. His point being it's not completely insulated either. Back to you guys.
All right, Josh Lipton. Josh, thank you very much. All right. So we know the stock fell, okay, but Guy Adami, let's be clear. Let's be clear. Apple is still up nearly 9% this year. Coronavirus has now been going on for the better part of a month. Did you take any sort of comfort or solace in the way it traded?
You have to. I mean, if you had said to me, what's Apple going to do on Tuesday with this news, I would have said that's probably down 5.5%, 6%. Broader market's down 350, 400 Dow points. And here we are. Stock was down not even 2%. And then you say, well, maybe the supplier's going to get whacked. You look at Qorvo, only down 2%. Skyworks, which I think gets almost 50% of their revenue from Apple, down maybe 1.5%, 2%. These are minor moves given the huge run not only these stocks have had, but the broader market has had. So you have to be encouraged. Now, quickly, I'll say this. I still think 280 is a level that Apple needs to revisit, given what's going on in the world and the potential for a sell-off in the broader market. But just today, you have to be very encouraged by the price action.
I mean, bad news, good price action. It's the old trader saw. That's when you want to buy it. So if you're an aggressive trader, I think you can buy Apple today, use today's low as your stop-out point. If you're not that aggressive, wait for the breakout. But I think this also tells you what the kind of the psychology of the market is right now, which is, okay, coronavirus bad, but it is likely a temporary phenomenon. And it just means that earnings are going to be pushed to the next quarter or to the next quarter after that. And so investors are saying, I don't necessarily want to sell. And wait, add into that, every central bank in the world is probably going to open up liquidity spigots again. So you combine those two things, temporary coronavirus plus liquidity. That's why I think this market is staying elevated.
But I have to say, hold on a second, because I agree with everything you guys said. And when you consider we do this all the time, it's 11.5% of the triple Qs. If you look at the XLK between Microsoft and Apple, you've kind of 30%. The dynamic here is Apple, more than most tech companies, gets a greater percentage of their revenues from Greater China. Greater China is mainland, Hong Kong, Taiwan. And if you think about the quarter that gave everyone the reason to bang the table or to be emphatic about their Apple calls, you actually had 14.8% of your revenues from China, and that was up 3%. And the previous 4 fiscal quarters, it had actually been down. So, and I realize you guys are talking about market dynamics. They couldn't be clearer, and I think you're right. But I do think we have to think about Apple, and I do think Apple, for the next few quarters, there will be a hangover from this, even if the coronavirus ended tomorrow, which it's sadly not going to.
I hear what you're saying, but I got to say I don't fully agree. I think that a lot of the Apple story is 5G. Right. And I don't think the coronavirus really changes 5G at all. I think it was the latter half of this year's story to start. So, I mean, to me, it's not surprising that Apple announced they would miss. It would have been shocking had they announced that they're not going to miss. Right. So the part that was actually more impressive to me, and you brought up, was the SMH. I mean, that was a really
semiconductor. And by the way, the NASDAQ 100 finished higher, which is comforting a little bit, I think, given what your point is, Tim, something that I've sort of beat that dead horse a bit, which is the weighting of Apple, and yet the NASDAQ 100 went up. I mean, fractionally, but it went up.
It's extraordinary. And to be clear, also, the platform companies in big cap tech, mega cap tech are the ones that have been outperforming. The rest of tech's really not. And so if you look at what Apple is, as far as I'm concerned, it's a platform company, even though it's a hardware company. We're pushing the company higher on 5G, also and on services. But I do think you have to be somewhat wary about liquidity dynamics. And yes, passive investing works until it doesn't. This is a number that everybody said would have been something that bottom-up investors would be knocking this company down after a record run. By any measures for this company, it's been a record run for Apple since June of last year. And I don't think you can say in one day of trading that, you know what, no big deal.
Yeah, I think it's fair. And it's interesting, Brian, you use the word comforting. And I understand why you would say that. But I could push back and take the other side and say it's actually somewhat disconcerting that the market doesn't react to any bad news whatsoever. Tim just alluded to in terms of passive investing. I mean, that's great. Markets go up every day regardless until they don't. And the longer the markets look past all the bad news that we've seen, I think the more worried you should actually be.
I'm going to push back on your pushback.
On my pushback.
And I want someone to push back on my pushback on the pushback. Because here's the thing. If
someone's falling over.
Yeah, exactly. If you need one of these, so I'm holding up an iPhone for everybody on the radio.
I'll push you back.
If you need one of these, you're going to get it.
I understand.
Now, you may not get it this quarter. You may not get it in the second quarter. But if you need a phone or a computer or you want AirPods, you're going to get them. Maybe the market just realizes, okay, the first quarter is not going to be good. But everybody's already said, ignore the first quarter pretty much universally when those numbers come out. We've had 173, I think it is, I heard on CNBC this morning, companies reference coronavirus already. So those sales maybe it'll have a monster second quarter.
I'm not sure what your pushback is, though. Again, pushback, so you're pushing back on him, but actually it sounded like you were on the same side.
Because he said that he didn't find it that comforting because the price action didn't work. And I thought maybe the market just thinks, as opposed to selling 15 million iPhones this quarter, and I'm making that number up, they'll sell 30 million next quarter.
I'm looking at it more broader, not necessarily Apple specific, but the fact that the market in general looks past any semblance of bad news. And quickly, you used the word need. Nobody needs these phones. I'm hard-pressed to find a person on the planet that needs it. We want them. And, you know, it talks to the strength of the consumer again. I'm not so certain. Never underestimate the consumers want to spend. Should they be spending as a bigger problem?
But you guys you should just apply this, and girls, you guys should apply this argument to the entire market then. Because, in fact, if you're making this case that Apple's, maybe you're not, that Apple's separate from the rest of the pack. Because every other day when we're talking about coronavirus, unless we think coronavirus doesn't matter at all, I don't see why Apple, Brian's argument that you delay your purchase, but eventually you're going to buy that Apple phone is the same for anything. It's the same thing that I was arguing about casinos.
Except the restaurant. No, a casino you lose, you bet every day. Or
yeah, but revenue's gone.
You don't go back and eat in time.
Right, but it goes back to is whether or not you think this is a temporary disruption or whether or not you think that this is something larger. And so if you're in the camp that you think this is something larger and the economy, the global economy was weak already, then yeah, you want to be selling stuff.
You're the panelist. You're supposed to answer the
question. No, my point was with the same point I said at the top of the show, you buy Apple here and you can buy the market until proven otherwise. We can get to bubble levels. We can get to crazy valuations. That's my point. If everybody wants to turn on the spigot, I mean, look at Europe, right? Their economy, Germany's economy is terrible. They can't do fiscal stimulus, so they're going to have to print more money. China is already printing more money. They're going to have to do more. Most of Southeast Asia will likely do that. That is all going to spill into stocks in a direct and indirect way. So until that dynamic stops, it's really hard to say that the fundamentals matter.